Have you ever felt like home ownership is just out of reach? Like there's a secret playbook no one gave you? You're not alone. But today, that ends. This video is the key to understanding every home loan that can help you buy, build. I'm here to inform you. I'm here to empower you. Let's break down every option and turn confusion into confidence. Conventional loans are the gold standard of mortgage lending. These loans aren't backed by a government agency, which means lenders take on more risk. But you benefit if you have strong financials. They conform to the standards set by Fannie Mae and Freddie Mac, and they're often your ticket to the best rates. These loans come in two types, conforming and non-conforming. Conforming loans meet loan limits and criteria set by Fannie Mae and Freddie Mac. Non-conforming loans, like jumbo loans, are used when the amount borrowed exceeds those limits. Most conventional loans are 15 or 30 rate fixed mortgage, but adjustable rate options are also available. These are best for buyers with strong credit, stable income, and have 3 to 20% down on their home. So what are some qualification requirements? Most lenders are looking for a credit score of 620 or higher, debt to income ratio below 43%, proof of consistent income, and minimum 3% down, 20% to avoid the private mortgage insurance. Here are some pros. Lower interest rates for well-qualified borrowers. PMI can be dropped after 20% in equity. Wide lender availability. Cons. Requires higher credit and financial stability. PMI with less than 20% down. And stricter underwriting. Government-backed loans. So what are FHA loans? FHA loans make homeownership more accessible. These loans are backed by the Federal Housing Administration and allow for lower credit scores and smaller down payments. Perfect for first-time buyers or those with some financial bumps. You can qualify with a credit score as low as 580 and just 3.5% down. Even those with scores between 500 and 579 can qualify with just 10% down on your home. You will pay both an upfront and monthly mortgage insurance premium, which protects the lender in case of default. These are best for buyers with moderate credit or minimal savings. Qualification requirements. Credit score of 580 plus for 3.5% down or 500 plus for 10% down. Steady income history and debt to income ratio typically between 57%. Here are some pros. Lower credit and down payment barriers. Ideal for first-time home buyers. Can include renovation costs via 203K. Cons. Mandatory mortgage insurance, regional loan limits, and not great for high-priced homes. Now let's go into VA loans. VA loans are earned benefit for veterans, active duty military, and some surviving spouses. Backed by the Department of Veteran Affairs, these loans offer 0% down, no PMI, and excellent interest rates. They still require credit and income qualification, and a certificate of eligibility, COE, is needed. While there's a funding fee, it can be waived for some disabled veterans enrolled into the loan. These loans are best for qualified military members and veterans. Qualification requirements. Qualification requirements. Certificate of eligibility from VA. Credit score around 620 plus. Sufficient income and DTI. Here are some pros. No down payment or PMI needed. Competitive interest rates. Flexible underwriting. Cons. Primary residences only. So you can't purchase a rental property with the VA loan. Funding fee can be waived. And not all lenders offer VA loans. Now let's jump into USDA loans. USDA loans are designed to promote home ownership in rural and suburban areas. These loans are backed by the U.S. Department of Agriculture and offer 100% financing with zero down payment. You must buy a USDA eligible area and fall within income limits generally capped at 115% of the area median home. These loans are great if you're okay with a slightly longer commute in exchange for big financial perks. These are best for moderate income buyers in rural suburban areas. So let's look at qualification requirements. Property in USDA eligible zone. Income within program limits. Credit score of 640 plus preferred. Here are some pros. No down payment. Lower mortgage insurance. Accessible credit standards. Cons. Geographic and income restrictions. Slower processing time and only for primary residences. So once again, you can't purchase a rental property with a USDA loan. Let's look at home equity loans versus HELOCs. Home equity loans. Home equity loans let you borrow a lump sum based on the value of your home, usually up to 85% of your equity. They're best for large one-time expenses like renovation or tuition. Repayment is in fixed monthly amounts, and you'll have predictable costs. But remember, it's a second mortgage, and failure to repay could lead to foreclosure. These are best for one-time big expensive. Qualification requirements: 15 to 20% equity minimum, credit score of 620 plus, and stable income, of course. Here are some pros: fixed interest and payments, large loan amounts, easier budgeting. Cons: not flexible once dispersed. Fees and closing costs are present. Home is collateral. HELOC is revolving line of credit secured by your home. You borrow as needed during the draw period, usually 10 years, then enter a repayment period. This option offers flexibility for ongoing or staggered expenses like home upgrades or tuition, but many have variable interest rates, so payments could rise over time. These loans are best for flexible ongoing financial needs. Qualification requirements: 15 to 20% equity in your home, credit score of 660 plus, and proof of stable income. Here are some pros: you borrow as needed, interest only payments during draw, low upfront costs. Here are some cons: variable interest rates, repayment terms can spike, your home is still at risk. So let's look at renovation loans. Fannie Mae Max Style Loan. The Fannie Mae Max Style Loan allows you to combine purchase or refinance costs with renovation funding in one mortgage. It's ideal for buying a fixer-upper and improving your current home with one loan. The amount you can borrow is based on the home's after renovation value, or ARV. You'll need a licensed contractor and a solid renovation plan. Best for big upgrades or fixer-uppers or current homes. Qualification requirements: credit score of 620 plus, 3% down payment, licensed contractor, renovation costs less than 75% of the after renovation value. Here are pros: one loan for purchase plus renovation, low rates compared to other loan types, boosts home value. Cons: requires plans and contractor quotes, more paperwork, and periodic inspections required. Let's look at FHA 203K loans. The FHA 203K is another great option for rolling renovation costs into your mortgage, especially for buyers with less than perfect credit. It comes in two forms: limited under $35,000 and standard for structural changes. It's designed to help rehab older homes, and you have 6 months to complete the work. The loan is limited to primary residences and has looser credit standards. These are best for renovating a home with a lower credit score. Here are some qualification requirements: credit score of 580 plus or 500 with 10% down payment. Home must be a primary residence, so once again, no rental property. Licensed contractor is required. Here are some pros: lower credit barriers, allows both minor and major repairs. Government-backed security. Cons: extra inspections, mortgage insurance is higher, extended closing time. Section 5, cash out refinance. A cash out refi replaces your current mortgage with a new, larger one, and you pocket the difference in cash. Great for consolidating debt or large home projects. It lets you tap into your home equity at a relatively low interest rate. However, it resets your mortgage clock and increases your loan balance. These are best for homeowners needing significant cash from equity. Qualification requirements: 20% down, 20% plus remaining equity, credit score of 620 plus, steady income. Pros: large lump sum, lower interest than personal loans, one monthly payment. Cons: higher loan amount and monthly costs, closing costs. Home equity decreases. Section 6, personal loans. Personal loans offer fast funding with no collateral needed. They're perfect for smaller repairs or emergencies when you don't want to tap into your home equity. These loans come with shorter terms and higher interest rates, but the process is quick and doesn't tie up your home. These are best for smaller upgrades or fast cash needs. Qualification requirements: credit score of 660 plus, low debt to income ratio, proof of income. Here are some pros: quick funding, no home risk, no equity required. And here are cons: higher rates, shorter terms, and smaller loan amounts. Let's look at construction loans. Construction loans are for building a home from the ground up. Funds are released in phases as construction progresses, and once complete, it converts to a permanent mortgage. Because of the complexity and risk, lenders require detailed plans, licensed builders, and higher down payments. These are best for building your dream home from scratch. Qualification requirements needed: credit score of 680 plus, licensed builder and plans, and 20 to 25% down payment on your home. Pros include custom home funding, one-time close option, and interest only during build. Cons: complex process, higher upfront costs, risk of delays, and budget overruns. Now, here's a less common type of loan: bridge loans. Bridge loans help you buy a new home before selling your current one. It's a short-term solution using your current home as equity, letting you move fast in hot markets. They're high interest and short term, so make sure your current home is likely to sell soon. These are best for buyers before selling in competitive markets. Qualification requirements include a credit score of 680 plus, equity in your current home, and a low debt to income ratio. Pros include allows purchase before sale, no rush to sell, and fast approval. Cons include high interest, short terms, and risk if home doesn't sell fast. You made it this far. Congratulations. Now you know more about your home loans. Now you know more about home loans than most people ever will. And here's the truth: home ownership isn't just for the wealthy or the lucky. If you have a stable income, a good credit, and a dream, you can do this. Lenders want to work with you. Programs exist for every stage of life, every income bracket, every dream. Whether you're buying your first home, upgrading or downsizing, or building new, there's a loan that fits. Don't let confusion stop you. Let clarity lead you. If this video helped, please like, comment with your questions, and share it with someone who needs it. Subscribe for more expert real estate insights, and when you're ready to take the step, I'm here to guide you home.